All right. Okay. So, hey, I'm Seb Frey, Realtor, and I'm here with my partner in crime here, Victor Romero. This is me down by the beach, and I've been selling real estate since 2003. And Victor here, he was one of the founders of Santa Cruz Lending Group. He's a mortgage consultant, and you can find him online at victordromero.com. So we have a bunch of different things we're going to talk about today regarding mortgage forbearance. Here's the sort of outline. And if you want, I can send you the slides after the presentation. But basically, these are the topics that we're going to address today. But one thing to keep in mind is that this is a very fluid situation. Things are literally changing every single day with the finance markets and the CARES Act and legislation and like loan guidelines and all that stuff. So just please be aware that anything that we say today may not be true tomorrow. Like there was a very late breaking thing that happened just yesterday, which I've incorporated into the slides here. So just know that everything is changing day by day. So what we tell you today is true today, but it may not be as true tomorrow. So Victor, you want to take it away and tell us about mortgage forbearance? What is mortgage forbearance?
Hi, so mortgage forbearance is a temporary freeze on your mortgage payments. So it's as if your loan has been put on hold. The loan servicer, and the loan servicer is the person that collects your mortgage payments, must agree to the forbearance. With the CARE legislation, they're required to offer this to anybody that's been affected.
Okay, all right. So see here, I'm going to go to the next slide here. All right. So Victor, how do you know if you qualify to get this mortgage forbearance?
Well, the first part is that you do need to have been affected by COVID-19. The legislation essentially put in place states that affected is loosely worded definition. If your hours have been cut, if perhaps your overtime has been cut, if you're receiving room rents and you're no longer receiving them, in essence, anything that's affected your income due to COVID-19 would be a reason to apply for the mortgage forbearance. One of the things that they came out with is that your loan must be a federally backed loan. That includes loans generated or owned by Fannie Mae, Freddie Mac, or Ginnie Mae. That's your regular conventional loans, your FHA loans, your VA loans, and USDA loans. Because jumbo loans and lines of credit and non-owner loans, those fall under a different category. Those are more specific to the investor that owns them. So you have to actually contact whoever you're paying and seeing if they already rolled something out. Third thing is you need to be current on your mortgage when you apply. I was reading this morning that you need to be no more than 31 days late as of May 1st, which is when this got enacted. So as of May 1st, no more than 30 days late or 31 days late.
Oh, okay, well that's a brand new thing,
Well,
right?
it's funny because last night Seb and I were talking, and Seb sent me an article that some breaking news that just happened last night, and then this morning there was more news coming out as far as Fannie Mae and Freddie Mac implementing further guidance to the lenders. We have to remember that when the government, like Big Brother, tells us what to do, it takes a while for everything to work its way through the system.
Okay, so I just want to point out that almost everybody who got a loan on a property that is between 1 and 4 units, almost everybody will have their loan owned by Fannie Mae, Freddie Mac, or Ginnie Mae. So this does apply to the vast majority of homeowners, unless it was a jumbo loan. So unless your loan was over, depends when you got your loan, but over your first loan over $700,000, 700 and change maybe, then it might not be a
We're
Fannie or
talking
Freddie loan.
90% of loans.
90% of loans will be this. And there is a way to go online and check if your loan is owned by Fannie Mae or Freddie Mac or Ginnie Mae. There's a tool. You can type your loan number onto their websites and they'll tell you if your loan is owned by them. And so that's how it works. When you get a loan from a lender, they loan you the money, but then they turn around, they sell your loan to these government sponsored enterprises, Fannie Mae or Freddie Mac. And then there's a loan servicer. The loan servicer collects your payments and sends it to the bank, to the actual investor, which at this point would be Fannie Mae or Freddie Mac. Okay, so next slide here. So Victor, take us through mortgage forbearance. What are the steps that you want to go through in order to get this mortgage forbearance?
Well, I guess the first thing is if you've been impacted, the first thing to do is contact your servicer.
So not Fannie Mae, not Freddie Mac. Contact the person who you send your money to, the company.
Yes, these middlemen are the ones that collect the payments for Fannie Mae, Freddie Mac. So they're the ones making a small profit on top of it. But anyway, so you contact them and then you let them know that you've been impacted due to COVID-19 and that you've heard of this mortgage forbearance. Now the forbearance, the original term of the forbearance is that it's a temporary hold. So technically everything is due at the end of the forbearance period because that's the definition of the forbearance. But further into the slide, to this presentation, we'll talk about the options that Fannie Mae and Freddie Mac are coming out with to cure a lot of these missed payments. Going back to this, servicer will ask you if you've been impacted. You have to remember there's no documentation required to prove your impact. I mean, no documentation. They won't ask you for pay stubs, bank statements, tax returns, none of that. They just simply want to know if you've been affected. Once you certify that, and basically you can do it online or over the phone, they will put you in a forbearance, meaning they'll put a hold on your payments, and you're eligible to have your payments held for up to 6 months, 180 days. There are lenders that are starting with 3 months with a 3-month guarantee of extension if you're still needing help. And how and when missed payments will be made, they'll try to put you on a plan. And then after this, the servicer will send you documentation for you to sign to certify that you are participating in this forbearance.
So I think that an important thing to note here is that there's no documentation that you need to give them showing a loss of income or anything. It's basically they're going to take you for your word that you've been impacted or affected in some way, right? You don't have to prove it. Is that correct?
That is correct. Now, we'll talk a little further because they're coming up with solutions on the amount that's due, and there's a lot of back and forth about whether or not they're going to require then proof that you're back on your feet. So
okay.
We'll talk a little bit more.
Right. We'll get to that in a little bit. Okay. So how long does this forbearance last?
Currently, the legislature says 180 days. There are servicers that are extending this to up to a year.
Okay.
So 180 days.
So I think this is where a lot of people are kind of running into a bit of a gotcha, is that they will go and they'll apply for the mortgage forbearance, and then their servicer will give them 90 days, right? But the legislation says that you get up to 180 days, right? So when you're talking to your servicer, don't be surprised if they tell you 90 days. And then if you need more time beyond that, you'll have to go and have another conversation with them. Is that about right?
That is accurate. You'll have a conversation with them. I have had 2 clients that have applied for it, and the servicer stated that it was only for 90 days. And then when they actually received the paperwork in their hand, it was drawn up for 180 days.
Okay.
So because this is so fluid, I think that the servicers are playing catch up as well. So they're being instructed. I mean, at the end of the day, it's a human business. So you got managers, middle managers, and employees trying to keep up with all this information.
Right. Okay. So when you go to apply, don't be surprised if they don't give you the whole 180 days right off the bat. Um, okay. So now this is a big thing that I know a lot of people are really worried about is how does forbearance impact your financial future? So Victor, can you go over this with us?
Sure. So forbearance in itself will not impact your credit score. And the
Well,
reason it
it
doesn't,
should not. It should
it
not impact. We
should
don't
not,
want to make any promises here.
yeah, should not impact your credit score. And the reason that it should not impact your credit score is because they will not be rating your credit report as late. They basically will not be rating it in any way. Um, there may be an impact on obtaining new mortgage credit because a lot of times when you go and apply for a new mortgage loan, you need to be current on your current mortgage for a minimum of 12 months. The balance of the missed payments will need to be made at some point. There's announcements as of yesterday and this morning that Fannie Mae and Freddie Mac are essentially going to create a secondary position on your mortgage, whether that's a secondary loan or a secondary feature of your primary loan, where they're going to put the balance that you're accruing with the missed payments into an account at a 0% interest that's due and payable upon maturity date of your mortgage, upon selling or refinancing of your mortgage. Now, that is, in the technical sense, a modification. And with modifications, you do have to apply for them. So, because all of this is brand new, and if we remember back 10, 15 years ago when everyone was getting a modification, you did have to provide documentation in order to be able to participate for that part of the program. So, as of today, there's no clear insight as far as whether or not you'll have to provide pay stubs at that point in time to qualify to have it placed in the secondary account.
Okay. So I think that a lot of like, I know that some people, like when this first began and they heard they could get mortgage forbearance, they were calling up their servicer and the servicer was saying, yeah, we'll give you, you know, you won't have to make any payments for 90 days, but then with your fourth month, we want you to pay back the first 3 months in totality along with the fourth month's payment, right? So obviously that was a big problem for a lot of people. And that wasn't a universal thing, right? Not all servicers were saying that. Um, and it really is sort of up to the servicer. Some of them might be saying, okay, well, you can make, 10 payments for the missed payment or whatever, right? So they're going to give you some options, right, at the end of your forbearance period, right? And a new option as of yesterday is that they may allow you to repay all your missed payments at the end of the loan, either after it expires for 30 years or when you refinance or when you sell. But what you're saying, Victor, is that they may make you qualify somehow to receive that option. Is that correct?
They may make you prove that you're back on your feet. This is correct. And that loosely worded because it may just simply be an application where you state certain facts.
It could be like an affidavit, essentially.
This is correct.
Right. So I think that I mean, bear in mind that there's millions and millions of mortgages. There's millions of people who are probably going to be applying for this forbearance. That's obviously going to be a lot of work to get done in a very short period of time. So they might be taking some shortcuts, right, and just go for like an affidavit. So you will have to see how that actually works out. We don't actually know, but I think that there's a general sense that they don't want to have a repeat of what happened in 2008. That was not a win-win situation. I think they're going to try to avoid that any way they can.
This is correct. I
So,
agree with that statement.
and I don't expect that. I mean, when you call somebody, it's a human on the other end of the phone, right? So I wouldn't expect that they're going to be warm and fuzzy and embrace you and serve you, graham crackers and hot chocolate necessarily when you call them. But I think that there will be a willingness to work with you on making those missed payments back much later.
I agree.
Okay, all right. So also, I wanted to highlight this at the very bottom, right? mortgage guidelines require 12 months of on-time payments for a new loan, right? So will it affect your credit? It won't affect your credit score, but there's more to your credit than your score, right? There's your whole credit report, right? And then they have these, it just shows the payments made or not made. It doesn't report that you're late, but it does show that you're missing a payment. And right now, mortgage guidelines do say that you need 12 months of on-time payments to get a new loan. Right now, that could change in the future. It could be 24 months in the future, could be 6 months in the future, right?
This is correct.
Right.
So yeah, so they want you to be paying in order to obtain a new mortgage.
Right. And so this I think is there have been a lot of people saying, hey, be very careful about taking advantage of this mortgage forbearance. And I think that a lot of the reason is for what we see in these two slides. When do you repay the amount that they let you skip? And then when can you refinance? Because a lot of people would probably love to refinance, but they can't necessarily refinance right now, but they might want to refinance like in 6 months, right? So if you do skip any payments, you might not be able to refinance. In fact, right now, you won't be able to refinance in 6 months. So that's an important thing to remember.
Yeah, and just to kind of touch on that point, and my belief is that they will come up with some further guidance as far as how to deal with this, because we're talking, I think the last statistic was like 10 million loans, something like that. So it's a huge amount of loans of people that aren't going to be able to participate in the historically low rates that we have now. And really the refinancing activity is really part of the reason, or part of the solution to this issue as well, because you can save a couple $100s on your mortgage to get back on your feet as a permanent fix versus a temporary fix.
All right. Okay, great. So here's a big question is that my brother told me the other day that his financial advisor told him, go ahead, get mortgage forbearance. Go ahead. Why not? Why wouldn't you? Right. I mean, so why wouldn't you get mortgage forbearance, Victor, if it's so great?
Well, I mean, we just talked about some of the facts. Is it's really meant for or intended for individuals affected by COVID-19. So one of the drawbacks is that if you do participate, then you'll be ineligible for refinance for essentially a year. So if that's something you're hoping for based on your situation, then that's going to be out the window. And the other part is once they figure out how to add this new balance to the back of the loan, we also have to prove, you'll have to prove certain facts. So even though they don't require proof now to get into forbearance, if you want to add the balance of your payments to the end of the loan, you may have to prove some facts there. And if you weren't affected, then you may be one of those individuals that are going to have to pay it all in a lump sum, at the end of your term.
Oh, that's interesting. So they might basically say, okay, well, show me your income. And they'll say, wait a second, you didn't have any loss of income. So we're not going to let you, kick it down the road till when you pay off your loan. We're going to require you pay it right now. So that's a good thing to know. All right. Not only that, but I mean, I would say you want to live your life with the most amount of integrity you possibly can, right? So, I mean, if you made a commitment to pay on your loan, you should probably make that commitment if at all possible, right? Or reasonably possible, I would guess you would say. So now, do you pay extra interest on your loan if you get a forbearance?
Well, not technically, not with the new guidance we received this morning, with the 0% down second option. I mean, there is no additional. You just have to pay the original interest that you should have paid on your mortgage. Let's see here. I'm just reading your slide because I want to make sure that nothing changed from yesterday. Oh, and that new rule with the secondary money does also apply to FHA and VA loans as well.
Okay. All right. So basically, they're not, as it stands right now, there is not going to be any extra fee on the forborne amount. Is that the right word, forborne?
Good question. I don't know. So yeah, there's not an extra fee. I think with the 3 points, I think the 3 points are still valid. Yeah, they're added back as a modification. That along with the second point is essentially the same thing. A modification is modifying the terms of your mortgage. So those two items may require you to prove that you're back on your feet. The other one is spreading out the missed payments over the course of time. I'm sure that that's another option that they're going to propose for individuals that perhaps weren't as impacted as severely as others. In this case, maybe an example such as your brother, where they're like, okay, well, just pay us back the money that you owed us over 24 months.
Right. Okie doke. All right. Let's see here. Next slide. So can you refinance your mortgage during or after forbearance?
After forbearance, you'd have to wait 12 months. During forbearance, no, you cannot.
Okay. So in other words, let's just say you began forbearance, you're 2 months in, you decide you want to refinance. That means you have to repay the forborne amount before you can refinance. You just can't refinance and have that forbearance, refinanced also.
So the amount that's due, as of today, no, because you haven't been paying on your mortgage. You have to be back paying for one entire year after you're out of the forbearance time period in order for you to qualify for a refinance.
Right. Okay. So if you do the forbearance thing, you definitely
you're out for 2 years. If you're not going to be making payments for 12 months, then as of today, you have to wait an additional 12 months after that. So you're out solid 2 years.
Oh, I'm sorry. Say that again. You're out 2 years. What?
So let's say you're in the forbearance for 12 months. That's 1 year.
Oh, okay. Oh, I see. Yes. Okay. Got it. Right. If you are getting forbearance for that long of a time period. Okay. All right. So now this is a big one. How about rental properties or second homes? A lot of people have rental properties and second homes. Can you get forbearance on those too?
This is correct. You get forbearance on rental properties and second homes. It's just essentially applied to all mortgages.
All mortgages. Okay.
With the exception, well, all mortgages owned by Fannie Mae, Freddie Mac, and Ginnie Mae.
Right. Now, so if you have like a rental property and your tenant has stopped paying the rent, do you have to prove that or no?
Same deal. It's if you've been affected, which is if they're not paying, it's most likely because of COVID-19. Then you can apply for that. Now, what the servicer does at the end of that's a different question because there's no guidance right now for rental properties or second homes. Those are kind of left as a secondary issue because they really want to take care of the owner-occupied people right now.
Right. Okay. So if you speculate on a bunch of VRBOs,
Right.
same thing, right? Same thing as just any other rental property. Okay. All right. So now this is a big one is that what if I need more than 180 days, right? Or a year or whatever. What then?
You simply contact your loan servicer, and from what I understand, they're allowing an additional 6 months.
Right. Okay. So, but at some point, does it turn into a loan modification or like?
At that point, you've exhausted all the available time, and that's when the servicer is going to offer you something. So whether that's a loan modification, whether that's a secondary loan position, whether that's spreading out the payments over over an X amount of time, they're the ones that are going to propose this information. And as of this morning, Fannie Mae and Freddie Mac have already, and Ginnie Mae have already laid out some guidance as far as most of these loans will have a secondary loan or a secondary lien on the property for the 6 or 12 months of the forbearance amount.
Okay, so the secondary position or secondary lien you're saying, so they're sort of going to automatically, I mean, you probably have to sign something, right? But basically apply a small second loan with no payments, correct? And interest at the same rate?
So there'll be no interest and no payments for the duration that you have that. And then at some point in the future, when you go to refinance, you can add that money into your new balance, or if you sell the home, it'll be paid off.
Right. Okay. Now, do you think that servicers are going to start reaching out proactively to their borrowers at some point, or no? You still have to contact them, or will that always be the way going forward, or what do you think?
For forbearance?
Yeah, for forbearance.
They're not going to contact. They're inundated with phone calls right now. I think the last thing I heard was like 45 to an hour wait on the phone to try to talk to somebody.
Right. Okay. All right. Now, also, Victor, there's a lot of people who are in the loan modification consulting business. Are any of those legitimate? Right. Like if you do come to the end of your forbearance period, they won't give you another forbearance. You need
No,
to.
most of them are just scams. I mean, I think that we're going to see an uprising in a lot of them with everything that's going on.
Right. So you need to be very careful
Very
around
careful.
anybody who tells you that they can get you a loan modification.
Right. No one can
Essentially.
guarantee you getting your loan modification.
Right. Okay. All right. So now we have come to the question and answer portion of our presentation here. And I think I have to stop sharing and then I can go unmute all. So everybody has been unmuted unless you don't want to be unmuted. Are there any questions from anybody? Does anybody have any questions about anything that's been presented here?
I have a
There's
couple
also
of
a
questions.
chat thing.
I have a couple of questions.
Okay.
Okay, so one, you said there was an online tool to see if if you have Fannie Mae, because I'm not certain.
Yes.
What's that link? Is there a link to that?
I'll put some notes together, but basically you go to fanniemae.com or freddiemac.com and you type in your loan number and they will tell you if they own your loan.
The other thing you could do is if you Google Fannie Mae loan lookup, or Freddie Mac loan lookup.
Okay.
It'll give you the link, and then you have to put in the last four of your social, the address, your name as it appears in the note, and then it'll tell you. Just be careful. Make sure that on the URL it's the actual Freddie Mac and Fannie Mae website. You don't want to be giving this off to some random third party that'll be contacting you for some random service.
So if I call my the company, well they'll tell me, right?
If you call your servicer, they should know. So you don't have to have that information in front of you.
So when the whole pandemic first hit, I did call. It said 45 minutes. I was on hold for 2.5 hours. When they finally got on, he told me to call. I don't remember what he said. The Red Cross or something. It was crazy.
Were you one of the first people? Because I remember hearing about that. It was
one of the first people who called.
Yeah. Like, did you recently call, or was this?
No, it was like the first week when everything.
Oh, you need to call again. Things have changed. They changed almost daily.
Okay.
So, they'll give you a different answer this time.
Well, so he finally agreed to it, and he said, "I'm going to send you something in the mail, and you have to sign it." He said, "But you're going to have to pay it all back after the 3 months." So I never got anything in the mail.
Oh, interesting.
I just ended up just paying the mortgage. But my other question, so I'm going to call and follow up on that. But one more question. If you get the forbearance for the 12 months, but then after 2 months you end up being able to pay again, can you still not refi for 12 months?
That is correct. So once you become active again, paying your mortgage, you've been impacted. So you would have to wait 12 months from those. I actually had a client call me May 1st asking me about a refinance, and they didn't make their April payment. And that one day set them back a year.
Wow. Okay. Well, thank you. That's all my questions.
Okay. Does anybody else have any questions before we wrap it up?
Yeah, Seb, I had a question. This is Al Bettner.
Oh, hey, Al.
Yeah, hi. There's so many, I guess, there's so many scams out there. I saw something in the slide set about watching for that. But I guess my question is that could somebody abuse this? I mean, if you're not having to prove that there's distress, in terms of making this payment, somebody could stall and use that money that they would, normally pay the mortgage with. They could use it to say pay down credit card debt or all kinds of things. I mean, it's a little bit like, that's the thing. And is there any way that has some checks and balances, I guess, my question.
Well, I'll answer that really quick. So we got to remember this isn't free money. You still owe the money. So the checks and balances will come when they are done with the forbearance and they contact the servicer, or the servicer contacts them and says, okay, so you've been in this program for 6 months. How are we going to figure this out now with your, $15,000 you owe us? At that point, one of the rules, one of the new guidance is that you can add it to the back of the loan as a second loan.
Right.
But you have to prove that you were affected and that you're no longer going to be affected. And that part is unknown. So people that weren't affected, they were just using this to pay off other debt, may find it difficult to prove that they were actually affected and not have to pay the lump sum out at once. So there's always that risk that if someone didn't utilize the program appropriately, that they're going to be stuck. But in general, it's for the population as mortgage people that don't have a mortgage to help them out. So it's unethical.
Okay. Yeah. I mean,
so yeah, there's going to be some abuses for sure, I think. And like we said earlier, like, should you get it if you don't need it? And my advice would be, no, don't take advantage of it if you don't need it.
Right.
Just ethically, it's just a bad thing to do. And also financially, there are potentially some risks to doing that, and hopefully it won't be abused.
Right.
And I have friends call me and they say, hey, should I participate? I mean, my hours were cut minimally, 32 hours as opposed to 40. I said, this is intended for that precise reason. So if it means that you set this money aside and use it as a cushion during these hard times, because we don't know how long this is going to go. And if this person automatically gets laid off, the 32 hours goes to zero, at least they were prepared somewhat for that situation.
Right.
Versus taking the other side of it, where people aren't participating because they don't know if they've been impacted sufficiently enough,
Mm-hmm. Mm-hmm. Okay, good. Thanks for answering that.
All right. Any other questions? All right. Well, hearing no questions, I think we're going to wrap it up here. Thank you, everyone, so much for joining us today for this, my first hosted Zoom meeting ever. And I will send out a link to the video so you can watch it later, and some notes on like how to apply, how to check if your mortgage is through Fannie or Freddie or whatever else. So, hey, Victor, thanks so much for making the time this morning. I really appreciate it.
Seb, thank you for putting it on, and thank you for everyone for showing up.
All right, everybody. You guys have a great day and a wonderful weekend.
Bye.
Thank you.
Okay.